Welcome to TradeTheNBI.com. This is Jonas Reports for the 15th of September. Well, we saw it from the other day when the magenta crossed above yellow on the NBI indicator, suggesting that that support not only would hold, but we begin the build. We were seeing also significant fading in the short interest here on the DOC with the cyan collapsing. You can already see a big move of the DOC green over cyan. So shorts kind of vacating the situation and just giving a clear bull signal. It's just a question of whether that they've got enough juice to push it. They really haven't done a whole lot so far, and all we are is getting back to the beginning of the month, previous 61% level. And it's just that continued push of oil, the inflation conditions. They believe the Fed's going to have to stop, but I don't see how the Fed can stop on that. The best they could hope for was a suspension, but that would be bullish. But again, the market's not going to take a devaluation either. So you get an automatic inflation built into price, even if nothing changes from an earnings standpoint or economic standpoint. From the NQ standpoint, also pretty much identical, and even less interest in the short movement here from an NBI white completely collapsing, and you're getting a similar crossover. And this all began when we saw, even on the S&P, the beginning of the gold rising on the shakeout. It's just a matter of getting the shakeout to positive at that point, and once it did, that's enough to give it the juice that it needs, and that's why we look for that when it takes place. Treasuries continuing at the low end side of it, which increasing the yield, and we're right about where it should be at this particular stage. It's just a question of if there's going to be an acceleration from the Fed having to combat this situation, which is this monumental, staggering increase of oil. It's definitely going to plague the situation for pricing, particularly short-term, mid-term range, and it just means that as winter gets closer, the pressures, and of course that definitely makes the euro a problem, and you can see the reflection of that. And so it's no surprise this is really gets to problematic now, because we're at those bottom lows, and you break back below this 105 range, and that capital flight is going to be real, and it's already going to be real regardless. It's just a question of how much central banks want to invest to keep supporting it, because there's just no reason it's above parity at all, given what we're seeing from the pressure for the U.S. to continue rate rise. The ECB's weak. They can't do a whole lot, even increasing within the weak economic conditions with the war. And people don't think that that has a big drain, but it definitely has had a huge impact, particularly on the free flow of oil, and that certainly has made things difficult, particularly going into winter again. From a gold standpoint, finally a little poke back up, still pretty weak relative to what we're seeing from the commodity build in oil and that. So there could be some significant pent up pressure there that could be a nice boost in gold move. And you're seeing it in crypto. They're starting earlier, and it becomes one of those safe havens, so to speak, alternative to gold in that. But more so Bitcoin, you can see above its 23%, whereas ETH not quite getting the same support. And that ETH suffering from this huge distribution from that shakeout. So there's clearly a lot of unloading going on throughout this dip, and it certainly has created some trauma, needless to say. From our 50K, we can see how that build started and then just accelerated from there. Fairly clean overall. No complaints with that one. From an intraday standpoint, they started off with the little fade at the pre-market, but then as soon as the actual cash open began, it was nothing but up, and it was just a stair step back and forth. It's interesting to know. This is one that I've always debated when it comes to the programming section. When you do have a modest short configuration like this, but cyan under red, which is still always a buy, it's one of those where you see it from two different perspectives. Yes, you have a small sell. From my viewpoint, when you have steel coming from so far below, it's an opportunity on dips to go ahead and make a new buy. You don't see that same configuration when you get a little bit more of a sustained dip. Typically, it comes up, crosses over, and that pretty much ends the support that you get from it. So that's where I look for those crossovers of the steel coming from way down below, particularly on a DOC spread. usually is the beginning of it, particularly if below negative 13.5, which would be a little bit further. So in this case, this is why you see some of these spike highs within these starting short moves until it crosses over, and then it loses that ability to make that kind of move. Um, it's just worth noting. As we move into what the post market is doing, there was a continuation of the up push, and then just recently, um, sellers have filled in to take out any of the little stops and basically just remove the positive extreme that started there. So nothing all that dramatic, but at the end of the day, there's a lot of stuff building, and it's going to make the fall setup as we get towards the end of the month far more interesting, because there's some real problematic conditions that have to be dealt with as far as what's going to happen economically, and we're starting to see that pressure build. That's not necessarily an indication the market is going to decline within that. I think we're going to end up with some choppy back and forth, because there's two arguments to be made, both on that inflation side and the devaluation versus what it means for business in the short term, increased profits, because they're going to be able to raise prices earlier, potentially before they have to have replacement costs built into it. So they're getting their goods sold at a higher price from the cheaper product, and then later on they have to pay higher for it, and that's where they suffer. But that won't happen until next year. So it's a good way for them to pad numbers. As always, though, trade well. We'll talk again later. Have a good one. Look for me on the Skype chat.